All right, welcome back. Today I'm making a video, a little less preparation, but this one I think's better off the cuff more than anything. It's how much stacks of Bitcoin do you need? Now, I was thinking about, how much do you need to retire, but I think it's better if we do something better. Like we'll define a few stages for people, right? So, obvious one is retirement. That one I think everyone understands. Maybe the next one is retire your family. Retire your family. Right. Maybe next will be generational wealth. Don't mind my typing. And the last one is maybe glad to get in. Okay. What am I trying to do here? So I'm gonna build out a very, very simple model for you all to understand where I'm coming from, but also how you might want to look at things. So I'll give you the basic premise of the model and then we'll go from there. Very simply, I want to figure out how much Bitcoin and stacks do I need to retire. And the fundamental idea I can go on here is there are some chains, whether because of their adoption, their utility, sometimes maybe it's their staking mechanism, you'll be able to retire once you hold enough of that chain's token. Now, for example, Ethereum, you could say it's gotten so big that you can stake it and now you can retire off of it, right? Something like that. But that also comes down to, do you know the actual number of people that can retire off of that chain? Now, you have to have some idea of that and some reasoning behind that. And for Bitcoin and stacks, a lot of it has to do with, will Bitcoin become the greatest advancement in human history? I think it will be. Something like that. Will Bitcoin be relied upon for the future of digital, security? I do believe it will. Do I think data permanence is important? And do I think Bitcoin will be relied on for that? I do. And then something with stacks, part of it has to do with the Bitcoin yield and Bitcoin DeFi. But I think the other has to do with, do I think the ecosystem will get ahead of others? Do I think Bitcoin DeFi will propagate much faster in the future and all that? So I'm going to go off some very simple numbers here, but we'll start with, some laying out some of the foundation. So what is retirement, right? So obviously today this number changes, but I think a good solid round number everyone knows and likes to go off of is $1 million, right? So imagine $1 million and you can retire, right? So what would it cost to retire your family? Well, maybe, just throwing a number, maybe it costs $10 million. Now, let's be honest, there are many places around the world where even $1 million will retire your family. But that's kind of besides the point, right? A lot of this is about you want to strive towards, living wealthy. And, if you have to retire your family, a lot of it's not predictable in the future. So, you might need more money. Now, generational wealth, we're talking about retiring your grandkids or making sure that, your legacy lives on forever, but, you have this no, lack of financial, you know, volatility, precariousness in your life. So generational wealth will throw maybe 50, 100 million. I think 50 million is fine. Glad to get in. Glad to get in. Right. That to me that's like, I put something in the market and if I didn't, I'd have regretted it, and because I did, it's changed my life significantly. To some people it's just learning that's the journey, and they get so much out of this, the learning experience. For others, it's a dollar amount. And I think to me, that is somewhere between like 50,000 and a few 100,000. So going on the upper end of this, let's just say 250,000. Okay. So where are we right now? We're saying, to retire, you make $1 million out of this. To retire your family, you have $10 million out of this. To have generational wealth, you have 50 million. And to have a glad to get in scenario, you made $250,000. Okay. That's effectively what we're trying to say. Now, what I'm thinking is most people don't actually know, how much Bitcoin or how much stacks they need, to retire, simply because they don't understand the market dynamics of their token. And I think it's instead of thinking about it that way, I think it's better to get out of the short term mindset, go immediately to the long term. Think 4 years, 10 years, 20 years, and don't actually think about the dates, but think more about what you want as kind of like this. I don't want to say the outcome, but what I'm basically trying to say is you want to look at what the trend is. And if you understand that, the trend can change a little bit, but so for example, with Bitcoin and stacks, right now the trend necessarily isn't Bitcoin DeFi, but crypto has an ethos. Bitcoin has an ethos that tied together. If you understood, the things that are being developed on stacks and the speed at which it's being developed, and the reason why it's being developed so fast is because they understand that ethos so well, then you kind of understand that like there's gonna be a winner, and maybe it won't be seen right now, but because it follows that trend, that core ethos, it's gonna win out. And so when you think of it like that, it's it's more like it's just a matter of time when X, Y, and Z conditions are met. So I like to think about what are the number of people that will retire off of a chain, right? So just going off of some really simple numbers. If you can imagine right now, maybe 20, 10,000, 20,000 people retired off of stacks, and maybe, 100, 200, 300,000 people retired off of Bitcoin. Maybe. I don't know. Right. And now, does that mean, that many people own at least $1 million in stacks or in Bitcoin? I don't. No, those are just ballparks. But that's the general trend of what I'm trying to say, is that that's a good way of looking at it. Now, what would it take, for stacks to retire, 1 million people? I don't think 1 million's a lot of people, but to retire them, it is. It really is. And why am I saying that? Because if you think about it, you're actually asking for 1 million people, 1 million, to have $1 million each. So that means at a bare minimum, not including anyone else, the chain would have to be worth $1 trillion, right? Now, I don't know about you. I don't necessarily see us going to $1 trillion, in the next 4 years. Could we? I mean, yeah, I guess. Actually, we probably could. And that's maybe something that you need to think about, because now wait, it's just retiring 1 million people. But now here's the thing, it's not just retiring 1 million people, right? Because there's probably going to be a lot more than 1 million people that use it if it's retiring 1 million people. All those other people, they have everything from earning the pennies to the dollars to the tens to the hundreds to the thousands. Maybe it's not retirement money, but it's all the way up to it. So let's let's get back on track. So we know that Stacks might retire, hundreds of thousands of people in this cycle, maybe in the next cycle. And so, I think getting to this ideal of, maybe 100,000 people retired, or maybe 1 million people retired. I think that's the goal. And with Bitcoin, I think the goal is maybe we want to 10x or 100x that, if that makes sense. So let's write this down. So this is very simple, right? So if Stacks could retire maybe 100,000 people, Stacks retires 100,000 people, and Bitcoin, let's say it 100x's that. I don't think that's a hard sell. For Bitcoin to retire, what is it, 10 million people? 10 million people. I'm going to put this in full form. Now, if that is the case, that means we'll start by doing a little math here. So let's start with Stacks, right? So let's write this out. You guys are going to like this. So Stacks, 100,000 people times 1 million. So 100,000 people times 1 million is basically 100 billion is 100 billion, right? So that would immediately mean that we're at least a market cap of 100 billion. And if that was that would, I would say, be something like a minimum, because if this were to be the case, then we'd have to also pretty much add maybe 50,000 people 50,000 people who, I would say, if haven't retired, they could, and this could be a lot more. It could be 500,000 people. But let's, for argument's sake, put it as low as possible, and we'll kind of leave it off on this. Who basically on average have gotten to maybe half of what these 100,000 have been able to do. And now, generally, if you look at things like, charts, trading charts, tokens holdership, and you look at the top percentage holders, you'll actually see a ridiculous number of people in like spots 200 to 50 who in total maybe add up to a few positions in the top 50, and that tends to be pretty much because the top holders tend to really hold the most, and it matters, partially due to conviction. So we'll keep it simple, right? And we'll just go on average that 50,000 people, 50,000 people. Not it should be 500,000 people, and we should be going off of like 250,000 or $10,000 in Stacks at 500,000 people, but it and then that would massively increase this. So imagine we did 500,000 people immediately after that 100,000. 500,000 people make $10,000 in Stacks, or have or own $10,000 in Stacks. Think about that. And if by any chance you were to have, this, uh, you know, pay, I don't want to say like payment services and integrations and all that, then you'd have an infinitely higher number of people, maybe in the hundreds of millions or hundreds of millions of people who own like dollars here or there. But on average, and this is why it's something that you can pretty much just work out with this one set of numbers. We go with 100 billion. So to me, that seems like, will Stacks retire 100,000 people in 8 years? I would say yes. In the short answer, yeah, I think it will. Will Bitcoin retire, let's see, 100x that? So 10 million people in 8 years? Honestly, it's hard to fathom it, but yeah, I think it could. Because I think that the idea isn't so much, is that much adoption possible? I think that's not even the question. I think the question is, would it have that big of an effect? And, would the adoption lead to the kind of tying down of Bitcoin to real world value that, and also will scarcity go up to the point where, buys really affect the price? Um, so 10 million people retiring isn't too out of this world. So 10 million people, okay? If it costs $1 million for, someone to retire, 10 million, that would be a $10 trillion market cap. Now, just, for just a comparison's sake, obviously we know that the price of gold at the time everyone cared about when Bitcoin was, you know, a few years ago, gold was 10 trillion, kind of makes sense. Stacks currently is at a few billion. They've had, quite a good last few years. You could argue they're down a bit from their all-time high and all that, but to me, what's important is that, volatility isn't something to fear. I think what's important is that a lot of people, got in early, make profits, and then they start selling off a bunch. Um, but $100 billion market cap, especially when it's tied to Bitcoin in the way that it is, isn't that far out either. I think this is something that most people tend to ignore. And now we'll get to, I think, the core of all of this, which is, we'll start with looking at some of the price of stacks in Bitcoin, right? So first, the price of stacks, um, if the, so if you look at how you calculate, the market cap and price, one thing you realize is you don't want to go looking at, just the market cap and then figuring out, which token to buy, and then just assuming that that price and that market cap is enough. Now, if you're in ultra degen trading, there's things like liquidity and, and whose money is, who holds the keys to that liquidity and all that other stuff. But just on the basics for the chains that are fine, um, the thing about market cap is you need to know that a lot of these tokens, they can actually issue more of their token. So they can have more Ethereum issued. They can have more Solana issued. They can have more Dogecoin issued, as far as I know. That, you know, they maybe not Dogecoin, I don't know, because they got an interesting thing going on. But the point I'm trying to make is, their supplies are inflationary, and they can change with governance votes with using their token. Stacks and Bitcoin are not like that. As far as I know, Stacks included, their token supply is very hard coded into the chain. And that means even a governance vote probably can't change the supply. So, you know, what does that mean? If you know, Stacks was used and there was some vote, we can't just issue more tokens. And to me, that means you actually can run some really simple math, right? So like, if you imagine that the supply of, you know, if you can imagine that the supply of Stacks tokens is 1.81 billion tokens, which it is, right? So let's just write out the supplies for a second. So Stacks supplies 1.81 billion. BTC's supplies is 21 million. This is the total supply. Now, what's important to know is that if $1 million is what it costs to retire, and there's 100,000 people, right? That means that there's $100 billion in market cap. If you take 100 billion, so for Stacks, 100 billion, like the lowercase b, like the lowercase m. If you take 100 billion and divide it by the total supply of Stacks, which is 1.818, I think, 1.818 billion, you get, I think, almost exactly, or you get exactly 55 Stacks. Yeah? So, or what am I saying? 55 Stacks. $55 per Stacks. If you think about that, $55 per Stacks is an incredible gains from where we are. So if I had to chart what I would think, you know, $55 in 8 years, you know, what kind of chart that would look like. Honestly, I would imagine that something along the lines of it well surpasses $55 per Stacks somewhere in that chart first before maybe settling into $55. And that's just my general opinion, based on how like cycles work and how money flow works. Now, if you did the same kind of math for Bitcoin, right? Nothing so out of the ordinary that we're wondering, you know, like how is this possible? Like if you did the same calculation before we go to Bitcoin, if you did the same calculation for 5 million people, we're going ultra bullish, right? We're talking about Stacks as the next adoption. It is the next form of internet, right? Like the Bitcoin of cryptos, of altcoins, right? Suddenly you get to some astronomical numbers. So that would make, so 5 million people retired at $1 million is $5 trillion market cap. So out of 5, I need a capital T, no, maybe a lowercase, a $5 trillion market cap divided by 1.818 is roughly what, 2,750 or like 2,800 per STX. And that is bullish, right? So I think on a mid to bullish case, 8 years, this is what I'm expecting for stacks. And I think everything beyond that is just, get in early, compound growth, make it simple, plan long term. Let's do the same with Bitcoin, right? So we already know the supply of Bitcoin, which is 21 million. But now the real question is, how many people will it retire? In our example, we're going 100x for stacks. And I think part of the reason I want to do that, and I think I want to keep it, is because you can't propagate stacks without propagating Bitcoin. And then on top of that, Bitcoin's ethos is a little bit wider than stacks. And I love that. So I think what is important here is that no matter what, it makes a slightly bigger splash. So imagine we did 100x of the 100,000 and the 5 million people. So imagine Bitcoin retired 10 million and 500 million people. Right. Yeah. So that changes things. That changes things a lot. So I think what everyone tends to forget is that Bitcoin's already a dominant store of value, and if Bitcoin's retiring, which means $1 million held in Bitcoin, 10 million people, it suddenly becomes a $10 trillion market cap. But if it's retiring 500 million people, it becomes a $500 trillion market cap. And I don't know about you, but I don't know any other asset that I think I can trust to successfully reach a $500 trillion market cap from $1 trillion today. Crazy. So, where were we? So what happens if Bitcoin hits a 10 trillion and $500 trillion market cap? $10 trillion market cap. Let's just make this quick fast. $10 trillion market cap. Let's go lowercase t, and $500 trillion market cap. What are we looking at? So I think the very simple one is, was it 10 trillion? Yeah, it is 10 trillion. Yeah, I don't know what I was thinking. It wasn't. So 10 trillion divided by 21 million. Let me run the numbers. We're at 476K. Right? So basically nearly 500K. Which is, by God, what a number. And if it's 500 trillion, we're talking roughly 23 point some million dollars per Bitcoin. So now it's obvious to me when Bitcoin's currently at 100K and Stacks is like $1.60 that you're gonna want the kind of gains that translate $1.60 to 55 or $1.60 to $2,750 or $100K into $500K or to $23 million. Yeah. And so basically the last bit of this comes down to, how much should you own, right? Uh, and I want to say there's an argument to be made that you could almost double all of these, or maybe even quadruple all of these numbers, if you take into consideration things like the fact that, a large supply of tokens are currently and will continue to be staked or in DeFi protocols or just not in the hands of holders. And so that would mean that imagine 50% of the supply, 70% of the supply, 75% of the supply is just not in the hands of users. And you still get that number of people retired, right? And so it's there's a bit to this that affects the market dynamic, but to me it also, you should just look at it like the token supply and circulation isn't the same when some of those tokens really will never enter circulation again. Yeah. So let's run this last bit of math, right? Which I think this is just a healthy kind of question. We'll run like a very simple analysis of the situation. We won't go too deep on this one. So I think the really basic question is, and I think you all can do the rest of the math on your own here. So we'll just do one really simple scenario. How much stacks and how much Bitcoin do you need? You know, and I think the scenario we're gonna go with here is, $1 million you want to retire. Okay, simple enough. And you know, if stacks were to reach, this 100 billion, how much would you need? If it were to reach 5 trillion, how much would you need? Maybe we don't want to do the 5 trillion. Maybe we'll go somewhere in between this. But same with Bitcoin. When Bitcoin reaches $10 trillion market cap, or potentially $20 trillion market cap, or $100 trillion market cap. So I think we'll start with stacks because it's very simple to understand that when you have a fixed supply chain, then you just really need to look at a very simple equation of market cap, price, and the token supply. So with stacks, it's something very simple. We have this equation up here, which tells us that for $100 billion market cap at a total supply of 1.818 billion, get $55 per stacks. Now, if it's $55 per stacks, and you need to make $1 million, then you simply divide that by 55. Right? Very simple. the reason why you want to look at it this way, and the reason why I think this is important, is because you actually don't need to look at market dynamics. You just need to look at, wait, my tokens are fixed in supply. That's enforced at the protocol level. My token has a very simple supply and demand dynamic. Particularly, what's interesting with stacks is how it's tied to Bitcoin. And so all I need to do is divide my retirement, $1 million, the amount of money I need, divided by 55. That is about 18 point, I think, 2,000. So that means you would need 18.2 thousand stacks to retire in the next 8 years, assuming a general trend. And that's it. It's simple, simple math. However, 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 if things go up the wazoo, and we're talking just things go really, we'll start with one bull case. Things just go really well. Things go really well. What does that mean? Maybe instead of 100 billion market cap, right? Instead of 100,000 people retiring, we make it 1 million people retiring. Huh? How about that? If it's 1 million people retiring in 8 years, and suddenly we get 1 million retiring would mean $550 per stacks. And if it's $550 per stacks for 1 million, then $1 million divided by 550 is only 1.8 thousand stacks. So if you had 1,800 stacks, and stacks ends up retiring 1 million people in 8 years, you'll be one of those people. It's as simple as that. And we could do the same with Bitcoin, right? We'll just run some very simple math for Bitcoin, right? And I mean, like, what's beautiful about this is you actually don't even need to do some crazy math. You could just look at the price of Bitcoin it is today, right? 10 Bitcoin today will give you the amount of money you need to quote unquote retire in Bitcoin. 10 Bitcoin. Now, at a $10 trillion market cap, right? 10 trillion. That would mean that you'd only need 2 Bitcoin. And at a $500 trillion market cap. So again, this is at the most simple trends that we're just going to follow in 8 years. Whereas, if things just go really well, we might see something like, 100 trillion in the next 8 years. But just imagine things go bonkers. Then you need 1/23 million. You need, 0.06 or 07 of our Bitcoin to retire. Think about that. So, yeah, this is why I wanted to make this video. It's just a very simple way of how I look at things. I did a very old post. I'm gonna see if I can find it. Yeah, so here's the post. This was my case for stacks. Ownership is everything. So here, I was basically making the case that you want at least 1,500 stacks, right? Now, this was April 30th, 2024. Now, obviously, I think the price has gone through crazy amounts of fluctuations. Were we up then? I think we probably were. We were. This was the top, maybe April. Yeah, and I was basically saying that you want about 1 millionth of the network. Now, to me, this kind of like you look at something like this sell off, and you think like, you know, why are people selling off? We're just getting to this market hype. And as, the price kept correcting and correcting, and then, accumulation kind of begins, and then you just see the momentum start to push upwards. You realize that people were just making sure they had that exact amount that they know they needed and then selling off the rest. And I think in the future, people will be more like so much more bullish because the demand for Bitcoin is going to increase. But my argument here was you want to own 1 millionth of the network, and if you stacked in STX, you'd get it to that beautiful 1 millionth number. When billions of users will be coming to stacks in the future, where if you can imagine something as low as 1 stacks in one wallet, it's not with a capped supply, it's not something to underestimate. If you guys have any particular attachment, sorry, wow, to Solana or Ethereum or some of the other tokens, just know that some of those, I don't know, maybe the supply could increase, and that may not be favorable for some of you. And regardless of what we all think, Bitcoin's going to keep going forever. It's going to, Stacks is going to attach itself to Bitcoin and keep going. And it's just a matter of, do things want to build itself into Bitcoin? And Stacks is like, we're going to give you that full on utility kit, that cross between like, I used to look at Stacks as the blender and, Solana as like Adobe. So Blender, the 3D modeling, you know, versus, these cookie cutter tools that are super user friendly. But later on, you see how Blender changed and it became so dominant and used around the world, and the community so big. But also, Stacks feels like that killer app. So I'm definitely not worried that we're reaching something like $100 billion market cap in the next 8 years. I think the natural growth of the crypto ecosystem is going to lead to that. But I think what we're really underestimating is what happens when Bitcoin hits $1 million, and what if it happens in the next 8 years. Then I think Stacks can go to those incredible multiples. And SBTC just starting to come online in 3 days. They hit that cap, and now we're just waiting for them to unlock the cap and then allow withdrawals and all this other stuff, and that allows this free flow of Bitcoin from anyone around the world to anyone around the world over DeFi. And yeah, that's just incredible. I made this post. Bitcoin capped at 21 million. Stacks capped at 1.818 billion. Super, super bullish. And Stacks, I mean, again, the way I look at decentralization, I mean, I do think it's decentralized. I think it does matter, the fact that Stacks does have some governance and stuff for like SIP proposals and whatnot. But what I like to think about is they have the kind of decentralization that matters. And particularly economically, they do. So now, obviously, a lot of people do have a ton of stacks tokens, but it's the price is at such a good ratio to the amount of large holders that it makes it very you know it makes it very enticing for someone who's looking for an open network to join and immediately be welcomed, but also have the opportunity to accumulate to get some real value back with Bitcoin yield, with the DeFi coming to stacks. And then you see something like this, every Monday. So today's Sunday. Um, every Monday, Sailor's releasing his bat signal, as Invest Answers puts it, which is this SailorTracker.com post he puts out saying basically on Monday he's going to be buying a shit ton of Bitcoin. Now, that does mean he's been buying on Mondays? No. He probably buys it Sunday, Saturday, Friday, Thursday, the week before. Who knows? But it's when he announces it, and that's all that matters. Sunday and Monday have become one of my favorite days. Invest Answers talking about the dip today. So, we're seeing a little bit of a dip. We hit 93 some, flushing out some of those longs. As he's saying, Bitcoin liquidity hunt is on. 93.3 mark should have wiped out all those 100x leverage longs. Well, if you're doing a 100x leverage long, maybe you deserve to be wrecked, right? Like, not gonna lie, if you were like, okay, so it reached here before. Imagine you were here, or here, or here, right? Imagine you were here and you did 100x long. You thought you made it. Here, you probably thought you just got wrecked. Here, you probably thought you just got wrecked. Like, even the tiniest bit down, you lose at 100x leverage. Which is why you don't do 100x leverage. So, yeah, this was just another update. Very simple thing I wanted to share with you guys. Price of Bitcoin longs getting wrecked. I think this is just something you should know. It's a standard thing. The current price of Bitcoin is pretty much dependent on how many of the milestones going forward can we meet. So until then, price kind of stagnates around a general point. Right now, it's around like 90 to 100k. I don't think like 100k 110 is the next point. I think the next point's like 100 to 140. Because what I think is next is the first week of January, when we start to see people's tax accounting and all that kind of settled, and they're willing to wait a bit and make their first bits of purchases. Then people kind of see a little bit of the assets that they like going up, all the important ones going up, some kind of trends of things going up, and then we start the whole new year of innovation and the whole cycle. So yeah, if you guys enjoyed this video, if you enjoyed this breakdown of how much stacks you should own to retire, you know, or something like that, um, leave a like, hit that subscribe button, hit the notification bell. In the comments, please tell me what you think the price of stacks will be, because I am interested particularly in the price predictions by other people. That helps me basically build another kind of model that looks at the general trend, their opinions, people's current fear and greed levels. I think fear and greed is something, maybe I'll just, before I end this video, kind of talk about that. Fear and greed is a hard metric to kind of understand. Um, so this is interesting. They show it overlaid over the price of Bitcoin here. Can you show? No, it only shows to July 2023. It's not a great chart, but just looking at the fear and greed part of this fear and greed index. So there's this 100 to 120k, like 80 to 100, extremely greedy marker. But as you can see right now, we're at 54, right? So that's like right here, 50, 40 to 60. Fear and greed index is kind of this metric that looks at social chain, you know, volume. It looks at a few different things and comes to this decision of, are people more bullish or more bearish, or more so that will there be selling pressure continuing going forward, or buying pressure? And I think a lot of people rely too much on the fear and greed index, but I like to look at it more as it's a reaction than prediction. So some people are like, as we get more fearful, when there's blood in the streets, then you should go invest, right? And I think that's not a terrible way to look at things, right? But in a bull market, when everything will defy expectations and just keep going up, in that kind of market, you're gonna see a lot of greed that is misplaced, but you'll also see a lot of fear that is way too premature. So don't follow the fear and greed index like it's something to trade off of, but more so as something to tell you what are what is the tip of retail thinking. And if you can just think of it that way, it can actually benefit you in your decisions. So for example, if there's, certain things like surface level meme tokens that have reached some very surface level attention, but mainstream kind of attention, then you know that there's a certain amount of retail that hypes into things very quickly, or that doesn't do much research, or that is very quick to panic sell when things go south. And that's really more what this number is about. And it less and less so represents the majority of the industry right now. It I think it still may be a majority because new users kind of usually outweigh old users, but older users and more experienced users are growing in number day by day. And yeah, so it's something that you should kind of put a little bit of nuance towards. So yeah, if you enjoyed this video, leave a like, comment your favorite token, tell me how much you think Stacks is gonna go this cycle and next cycle. And yeah, peace.